and welcome to this video on how to trade forex, gold, oil indices, crypto and bonds, and pretty much any market using supply and demand technical analysis. And this video is for those traders who are really wondering how and if my supply and demand techniques can be used on indices, bonds, etc. And I get a lot of questions, so I thought let me make a video on it. And the short answer is yes, right? You can trade my strategy, supply and demand, on any single market. It is applicable. Now, there are steps before that you have to be aware of, and one of the major steps is you have to ask yourself what makes the market move. If you're trading, let's say for example, gold, what is it that makes, the gold price rise or fall? And it comes down to fundamentals, understanding the market fundamentals, the risk sentiment, and general intermarket analysis to determine your directional bias. So every market has its own driving, fundamentals, driving forces kind of thing, yeah. And what provides really value to, forex exchange rate, gold, etc. So with forex, a currency's value is really dependent upon interest rates, inflation, the country's GDP, and risk sentiment. Yeah, so risk sentiment meaning that there are certain currencies that will, the Japanese yen and the Swiss franc, that will benefit from a risk-off environment, and there are commodity currencies like the Australian dollar, New Zealand dollar, and the Canadian dollar that will benefit from a risk-on environment. So we got gold is more risk sentiment driven, so again a risk off environment, and there's a lot of uncertainty in the world, fear going on due to, it could be politics, could be war, it could be even the cheapening of a currency. So for example, when if the dollar is cutting and Federal Reserve is cutting interest rates, that could have also affect gold. So risk sentiment, the US dollar, global supply and demand. Global supply and demand, not so much, but usually it's risk sentiment in the US and what's going on in the economy in the US dollar. So oil, again, global supply and demand, and also affected by things like like war sentiment, risk sentiment as well. Indices, again, a country's GDP and risk sentiment, and government treasury bonds, again, interest rates, and really risk sentiment. And intermarket analysis is just a study of different markets on each other. So for example, gold and is a risk asset. So what you'd find is that money will pour into gold when traders want to take their risk off the table, if they want to into a safe haven asset. If they want to, for example, they're feeling a bit bullish and they want to, put more risk on the table, then gold doesn't really pay, a dividend. It doesn't pay, any kind of interest. So what will happen is gold will go down, but then stock markets will tend to go higher. And it's the same thing, with certain forex pairs. When there's risk off, again, you'll have the Japanese yen and the Swiss franc tend to, increase in value as a store of value, and for example, the Australian dollar and commodity currencies tend to decline in the risk off environment. So there are intermarket relationships that you have to also be aware of. But the main thing is, if you're asking me why or how does supply and demand fit into trading indices or whatever market, whether it be crypto, you have to understand what makes your market move first before you even look at a price chart. So just a quick overview of understanding really what supply and demand is. And it's really, supply and demand zones are potential value, right? We understand, and the way I teach supply and demand is to really understand that you're looking for bargain, right? You're bargain hunt by using the higher high, higher low, and lower high, lower low principle. So pretty much what you have is this. Now, if this is an expensive area, yeah, and this is a cheap area or bargain. Why is that? Because buyers got in, pushed the market higher. Then, if this is obviously price and time, yeah, it's an expensive area. Buyers are no longer willing to buy at that price. That's deemed expensive. Then, obviously, when prices make a new high, yeah, a new high here. If this was the previous expensive area, yeah, and buyers start buying again, if prices go past the previous expensive area, then this is seen as a strong level of demand and buying, yeah, because buying was so much in such volume that it went past what was considered a previously expensive area, so creating higher highs, higher lows. So what you want to do, if you understand the principle, again, that's expensive, and this is only a bargain if it proves to be, if price proves to go past what would be considered an expensive area, and then on a pullback, this would be proved to be a bit expensive. Now, again, what you want to do is, and what traders make the mistake of doing, is trading, support and resistance. Support and resistance is not the bargain. Not to say that it can't go higher, but if you want to look for bargain and always trade bargains, this area here, yeah, is where you want to look for the best price. Yeah, the absolute best price is down here. Here, you're probably buying at maybe 50%, 38% discount, maybe even 61% discount. Where the demand zone is and where the bargain is right here. Yeah, so higher highs, higher low principles is what I use to determine potential value and the bargain. Because if it was a bargain here at this point and prices have pulled back, then the first touch of that level is always a great opportunity to look for buying opportunities. Yeah, so what we're going to do is we're going to look at another market, and we'll look at the technical analysis on something like, for example, gold. So on this gold chart, what I've done is I've stopped the price action in replay mode on TradingView to really the beginning of the year. And reason why I've done that is because, again, going back to what I was saying earlier with regards to why does the market move, and what you have to do is understand the principles of why, what drives the price of the market that you'll want to trade. There's no point in just looking at the technical analysis. Well, for me anyway, I couldn't just make price action work for me. I have to understand why I'm buying something, what gives something its value, and why is it more likely to rise in the future, other than a pin bar at a level of supply and demand, right? There's a lot more that goes into this. So gold at the beginning of the year, right? January 1st, 2nd, 3rd, right? Now, there was a Bloomberg report and probably several other reports at the beginning of the year that said central banks are on the biggest gold buying spree in half a century. This is the 31st of January. Central banks have second largest year in purchases on record. Demand for haven in Europe also aided demand in 2018. So pretty much they were buying up a lot of gold. So why is that, right? So central banks were expected to buy an additional 600 tons and diversify their foreign exchange assets assets in a time of extraordinary political volatility, signal a growth in confidence in the metals moving forward, right? So what we had at the beginning of the year and heading into the year was, there were some known knowns. So we had Brexit coming on the horizon. We had, Donald Trump trade war, etc. Right? These things hadn't, ended. They hadn't rescinded. So again, slowing global growth, a weaker US dollar, and a drive by central banks to expand the amount of gold they could hold could be a winning trifecta for investors seeking a recovery in the metals price after its annual loss in 3 years. So there was a lot of risk, involved yeah, in the coming year that the central banks had obviously looked for. And these are the smartest guys in the room, by the way. So when these guys say that they're buying, yeah, they're not buying because of price action, right? They're buying because of risk sentiment and fundamentals. So we go back to the gold chart. They were obviously buying in, from 2018. Yeah, that even though that report was from the 31st of January, once it was reported on, that the central banks were way ahead of the curve. So getting back to supply and demand. So what does that mean for supply and demand, right? What that meant is that what you wanted to do, understanding that trade idea, is you want to just be a buyer of gold at levels of demand. Yeah. Higher highs, higher lows. So we're going to go through the chart and look for buying opportunities. So let's say there was a buying opportunity right there. Yeah, so prices made higher highs, pulled back, buying opportunity. Prices made another move there, and then we have, just move this up a little bit right there. So now these are your opportunities to look for buying opportunities. Yeah, so let me go forward, and this was a potential buying opportunity if that was just as accurate. Let's zoom in a little bit. Yep, there we go. So it just about touched that demand zone right at the top. Buying opportunity. This is a daily time frame, by the way, which is what I use, and we look to go down into the lower time frame to look for entries. So as soon as prices came down into that demand zone, there was a buying opportunity on the lower time frame, like the hourly, 4 hourly, etc. Yeah, so decent buying opportunity. There we are. Prices make a new high. So then let's go forth, and that whole area there is probably now demand. So now what we're looking for is a pullback into this area, and the reason why that is demand, because prices have made a brand new high, the higher high, higher low principle. Yeah, here we go. Prices come down. Now this is obviously proven not to be a strong area of demand. Whatever was happening here, whether it was negative sentiment, anything could have been happening here. Not all demand zones are going to produce a profit. Yeah, so you may have entered, you may not have entered, depending on price action. Fine, no worries. Your next opportunity to get long would be at this demand zone right here, and what we're going to do is just move that up slightly as well. There we go. And remember, we're not looking at supply zones, we're just looking at demand, because we're understanding what is driving the market. There we go. Nice reaction off that demand zone right there. So then move that across, might move that a bit back a bit, yeah, and we move forth. So again, we've got a nice move up here, decent move, and then prices broke through. Now again, one of the principles of supply and demand is the more times a level is touched, the weaker it becomes. This level is touched this fresh area of demand, touched once, twice, and the third time, the weaker it becomes. So that wasn't necessarily a great area of demand, but prices came down to this area of demand. So now you're buying gold at what? A better price. Not buying all the way up here, you're buying at the lows. Yeah, here we go. Brilliant. Yeah, got a nice move. There we are. So prices start to make higher highs, higher lows. Here we go. We start drawing levels of demand. As prices keep making higher highs, here's a level of demand. Here's a level of demand. Because prices are making higher highs and higher lows. What we've got to do is wait for a bargain. Yeah, until prices prove, when prices make a new high and they prove that prices are no longer expensive here, then we can start to draw some demand zones in areas to see if this is going to be proved to be a bargain area. There we go. And again, as prices make new highs, there we are. There's another demand zone. And move that pretty much up here as well. Let's keep going. So price has technically made a new high there as well. There we go. Price has made a new high from here. Come down into the level of demand here. There we go. So you can clearly see, you can clearly see that if you just had a single idea and you had a bit of patience and you understood what drives the market that you want to be a buyer of, or a seller of, you can see for the whole year all you had to do was buy at demand and buy at pullbacks had you got a bit of a pullback into those levels. So if you don't understand why a market is moving and what drives price and why you're buying at value, then you're at a grave disadvantage. And every market has its macroeconomic drivers. So anyways, you can trade supply and demand, my supply and demand strategy in any single market, but you have to understand what drives your market. So I hope that helps, and guys, I wish you all the best. If you have any questions, leave a comment in the description box below. Hope you have a great trading week and take care.